The market was gapping lower, or is gapping still a little bit lower. We did have North Korea do a nuclear test. That caused us to gap down last week, or I should say their missile test last week caused us to gap down, and we know what happened there. It's just 3 days of buying after that missile test. So the only difference really here is the down move starting from higher prices. Certainly, if we look at Thursday's price action, the morning on Thursday, 247.30 was the spot we were looking at. I even maybe shorted there. And we broke through there at the end of the day. This morning, we're having some trouble, 247.30.
So that'll be all at 9:30.
I would say buyers back in complete control if we get back above this 247.60 here. We start to hold below 247 and break to the downside. I would take the short, see if you can capture a move. Mid 246s here, and see the size of this move. So the low was 242.30. That was in the after hours. 243 to 248, $5. $2. Yeah, I mean this seems about right for. I wanted to like catch some people off guard in this area here, 246.50, 246.30, and rip it back up to 248. IWM. So this went stronger to the downside and now going stronger to the upside. Well, in terms of the percentages, but it's still not. Didn't get back up to the highs from July. I mean, there was some news flow in terms of, I don't know, what Trump threatened. He made a couple of trade threats over the holiday weekend, going into the holiday weekend. I mean, usually that stuff is bogus. He's going to end up doing what his economic team tells him to do. But anyway, the point of that is those trade threats. Anytime there's a risk of trade war, and actually you combine that with the international risks, North Korea doing things, small caps are domestically focused. And you also have the dollar, which stopped being strong a while ago. The weaker dollar is better for domestic focused names. Actually, that's not right. A weaker dollar is actually better for exporters. So people are producing in the U.S. and exporting. All right, so IWM. So we're 141 in, I guess, at the open of London today. We want to watch 139.80 to 140 here. And 140.20. So a bunch of spots here. If we, it's so strong though. Anyway, I have alert set up here at 141. See if we test the pre-market high. All right, not much news flow. This biotech name had good phase 3. They met their endpoint. As these single biotech names, or these biotech names with small biotechs with single products, they tend to go up 80% or up 100, down 80% or up 100%, depending on whether or not a single drug works. In this case, you can see it was a $2 stock. Looks like their drug was going to work. Went up to 28. Now we're back up there this morning. The sharks here. we're gapping into this area here. The good thing is it normally doesn't trade a lot of volume. Normally trades about 500,000. It's already traded 1.7 million. So it's going to be definitely the most liquid name today in the market. You can see in the pre-market, it was doing probably over a million, close to a million shares here, consolidated, right at 25 and broke to the upside. That's a good pre-market trade. Wasn't getting ready for the morning meeting. That's definitely a trade I would have taken. You're looking at probably 30 cents of risk on a break like this. So it's so liquid at most. And it went up $2.50. Came back down, tested 26. And now maybe it looks like even 26 might be a level on the open. We have 25, 26 potential support areas. Based on the pre-market, 27. This is on the daily, 28 here. So now in the pre-market, there's a little bit of selling, 27.30-ish. So we'll watch. It's either going to make the lower high here and flush in, test this, or maybe even 25. It takes out the pre-market high. 28 is still a tough level. It'd still be looking for some type of failure there, at least initially on the open, on the short side. Buyer's still well in control here. The next one is UTX. And looks like I did short a little bit. So there was a 115.75 seller. It is now it's printing up here at 116. That's me getting taken up here above 115.75. So the deal with this is they're buying COL in a cash and stock deal. So for those of you who aren't familiar with the way this, like the merge arb plays work, if a company is acquiring someone and they're using stock, there's what's known as a spread between the takeover price and the price where the acquiree is trading after the deal is announced, which is COL. 140 was the announced price. And there's always going to be a natural spread, which there's some risk. There's some government risk. There's some, market type. Some events could happen to cause the deal to not happen. In this case, I didn't really see anything in terms of governmental risk, usually antitrust type concerns. And so any type of spread more than 3% in this environment attracts the risk arb funds. And what that means for us is they will short UTX and get long the acquiree, starting to narrow the spread. And so in this case, if we look at the daily, there's naturally some support at 115. So even if the risk arb funds are selling, there might be some buyers here that support it. But if it gets through there, there isn't a lot until 113.75 or so. And so that's the play. We haven't had a really good one in a while in this situation. And I'll watch the news flow on this one. As I said, I just shorted a little bit into 116. Even if it spiked more on the open, even closer to 117, I'd get very aggressive in terms of on the short, because it could absolutely roll over. No matter how strong it looks right on the open, it could absolutely roll over right back down to 115. And that's the play there, and that's why we focus on UTX and not COL, because it's more moving parts there. It's kind of, is the deal spread narrowing? Is it widening? UTX is going to be the main driver in this situation. The next is AMBA. This one bounced pretty good off of 42. I think it was Friday morning. So I don't remember if we have that as our bottom support, but you could see it came down at 42 initially, made the higher low, 42.10. I mean, it had a good bounce. It went up about $1.50 for rolling over the rest of the day. Went all the way up to 43.70 here, 43.80. So it's right at that 42 again. So use that as an inflection. It reminds me of Best Buy a little bit, and Best Buy got hammered the second day. Levels there below 42 is 41.160. Then below that 40 would be the big number longer term on the daily, whole number divisible by 10. And then if you want to look at the long side, you'd want to see it above 42.5. See, it's already down this morning. So maybe right on the open it pops up to here. 42.10. So Lulu. Made that 42 short play in the morning. Excuse me, 62. Failed a little bit, got through, and kind of held it the rest of the day in lower high. Came 61. Pretty sure I got flat into this 61. I didn't flip it back to long. I mean, overall, big picture, it's a pretty nice hold. Closing above 61 is pretty good for this. If it's consolidating above 62 today and breaks to the upside, 63 is next resistance in 64, but it wouldn't be wrong to play it on the long side. Okay, if funds stepped in and started to push it higher. Pan W was really strong in the morning Friday. Not sure why that's not working. There we go. So right on the open, failed at 46, came in a few dollars, and I made some money short that. Went up to 47, failed, but then made the higher low. Went up to, I think, our top resistance area with 48, and actually made a higher high before failing there. But it's pretty bullish price action overall. I mean, as I said in the morning meeting on Friday, it can be a little bit of a nasty stock. So even though it was very strong, had some pretty severe down moves intraday. Gapping down this morning with the market, I would say it's tough. But I mean, if it's consolidating in the 147 area and breaks to the upside, you could easily see it taking out Friday's high. A failure at Friday's high, and then I saw it back down below 147.30. I would be looking for a pull into 144, 145. That's it. Not a lot of news flow. News flow is going to be really slow, probably for the next few weeks. Good time to kind of review earnings season. What worked really well for you? Are there ways for you to kind of automate and build on that, build scripts and kind of define those plays? And then also the things that you didn't do so well on, but you noticed were pretty good patterns from earnings season. Is there a way for you to kind of improve on those patterns for next time? 6 weeks will be another 6 weeks before earnings season starts rolling out again.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.